Has the S&P 500 and the stock market really found its all-time high? And that's the real question that we're talking about today. Now, before we jump into that, we're going to be going over a few things as far as futures, the SPY, etc. So let's jump right in. This was your previous all-time high established back in July. Now, you can see that we've obviously made a clear-cut level there. And when we really look at the action, basically since September 18th, until today, you've mounted that level essentially perfectly. When I say mount, all I mean is you break above, and then that level has now become a support. And you can see this is the daily time for 4-hour time frame, and you're holding that just very strong, meaning buyers continue to step in there aggressively. And giving you like a look of something like volume, for instance, you can really see here as well, is that your volume ramps up typically as we get these touches, as we get closer to support, and then it kind of dies down as we get away from it. Now, a point that I want to make here that I try to make often is you don't need to have great volume in order to get continuation in a direction. But what you do need volume for is typically reversals, meaning coming down and then bouncing back up and getting breakthroughs. Those are typically big signs that you're looking for. And so as we look at the SPY now, you can see that you're now flipping your previous all-time high here as well, like the one you just made when you broke out of that massive level there, right? And now you're trying to find support at that level. And that's the question, and really where we're sitting now is this really your next support? Are we breaking out? Is this continuation? Or maybe, just maybe it's a trap? In my opinion, it's looking like continuation, but some of the other things we need to be looking at is some of the data in the background. Today, we had our CPI report, and as you can see, inflation has been really tracking towards the downside. I'll actually give you a little bit of a zoom in there so you can see. Take this ridiculous ad off there as well, and then here we go. So you can see that we've been tracking obviously to the downside, and we had a little bit of a surprise. The forecast was 2.3 year over year. You came out 2.4, but you're still on that downside. Month over month has kind of stagnated just a little bit, right? But the markets liked it. You also had your jobless claims, which showed that jobless claims were increasing. Once again, which the Fed has said, as long as that is happening, we have to continue to cut rates at a 0.25 expectation BPS going to these meetings. So that's kind of where we're at right now. Now, if we look at the other area of the market, QQQ or the Nasdaq, we'll look at both. You're basically sitting in this little bit of a range here. And I have this little illiquid zone, and I'll explain more here in a second. But this is where you're really sitting, okay? Like you broke up, got above our level here, 88, 487, 488, pushing to 494 once again with ease. And now we're struggling at that level again. And what do I mean by an illiquid zone? Let me break this down pretty simply as well if you're new here on the channel. So basically, if I grab this and I just bring it over here, we can see the volume profile. Basically, see there's a lot of volume, a lot of liquidity down here. There's more liquidity up here. And typically, when you're getting between these illiquid areas, you move very quickly and there's not too much resistance. Well, that's what happened here. You broke above it and then you move down very quickly. You broke above it. But right now, you're actually trying to hang out near the top of that illiquid zone, which is really interesting when we look at it in the hindsight. Then we take a step further. We look at Nasdaq and what's happening here, because I believe Nasdaq is probably the best metric at all points in time looking at the market. And I posted something here on Twitter today. If you don't follow on Twitter, I recommend doing so. You get all the charts, everything I'm looking at throughout the day, things along those lines. When I look here at the Nasdaq as well, I get excited, right? Because if you start to break over this level here at 20,515, you don't have much up here. There's no clear resistances. You have a little bit in your 20,600. But besides that, it's pretty illiquid. And we like to see that illiquidity because it means that we can move with speed. We can move quicker. We don't have to stay in those trades maybe as long, right? I don't have to hold it as long because you're going to get to point A to point B much quicker. And those are big signs that we like to see here in the market. And that's what we're looking for here. I go to ES futures, S&P 500 futures, you're just at all-time highs. Surprise, surprise. And then Dow also near highs as well. I don't want to go into all these levels. I've gone into them a lot here on the channel. Maybe tomorrow I'll break more down into levels. But I don't want to bore you. I don't want to go over the same stuff over and over because it's really been the same overall points. Now, on the other side of this, more fundamentally, we look at the dollar. A dollar has pointed to a risk on versus risk off metric here in the broad market. And even though the market's been rallying, really performing great, the dollar, as you can see, has been moving up. And typically when the dollar moves up, it's a risk off environment, meaning you don't want to have a lot of risk heavily invested into names because the dollar value is increasing, okay? And then on the other side of this, you have yields, the 30-year yield and the 10-year yield. And this is more important. See, on the downside here, we wanted to see the yield break below 4% and continue toward the downside, especially after rate cuts. And this was the going idea. And I would say even for myself that this took me by surprise, right? That you got back above 4% and moved back into the 200 daily moving average and really back into the top of this little range here where resistance is, okay? Pretty big surprise. And what's happening here too is you're seeing mortgage rates be affected by this. So really quick, if you want, you can use Mortgage News Daily. It's probably the best overall tracker for this. But you can see that mortgage rates started to spike. Now, we were dropping drastically for weeks upon end,
And then we spiked actually when we cut rates. Now, in my opinion, this could be due to the fact that we were overestimating if they're going to cut more aggressively, how that was going to play out. Because now they said after this, it will be more conservative with a 0.25, like I mentioned. But I still believe mortgage rates will gradually come down, just not as aggressively as we saw right there. So again, important things that we're looking for and that we have to be watching here in this market, especially as we're moving forward from here. So again, what we're really looking at here, these are some concerning points, but when I look at ES and the S&P, again, the story doesn't really look the same. Like the story seems like you're in a risk-on profile. So the question is balancing what is the market telling us and what is the market maybe fooling us here with, right? Or are we getting trapped? Again, I will tell you right now, I personally don't believe a trap is being set up on the market based on volume and based on the overall action short term right now. It just doesn't give me that overall feel. Now, what I will say, in order to be bearish, in my opinion, you need to start getting back below these levels back here. 565, your previous all-time high from July 16th, sorry. That would point to a bearish outlook in my opinion. Okay, Nasdaq, QQQ. Start breaking and making a lower low, getting back below even 477. I could potentially start seeing that downside opportunity step in if we start making lower lows as well. Because what do we know? The basis of being in a bullish market is making higher highs and higher lows. And the Nasdaq has continued to do that, even though it's lagging gradually behind the S&P 500. And the S&P 500 is in no doubt doing that because you're sitting at all-time highs. And something that I always tell people, you don't need to be the first one into these shorts. So hypothetically, let's just point out, if you start to break below this level down here that we have marked out, the white line, don't you still have plenty of room for the short side theory here? Back to the bottom of that range to 542, which we were trading in for, it seemed like weeks upon end, right? Why do you need to get in at the top? Those are questions that I'm always asking myself in order to put myself in the best position to make money in the market. Now, this isn't telling you what to do, what to buy, what to sell, not to sell. It's just telling you my viewpoint and why I think waiting here makes the most sense. Why make the $10 or, struggle for the $10 when I could potentially make the $20, $27 downside move, right? That's what I'm looking at here. And this move will happen, again, more aggressively as well, because, again, we have not spent the time chopping there. And we obviously know this is a massive support here on the S&P 500 as well. So important that we're paying close attention to that. Now, typically, I go into stocks and I break down a bunch of them. And as of like the past few days, I haven't done too many stock breakdowns. I do want to spend time going over a little bit of news that kind of came in here today. Now, if you don't know, AMD, they have like their little investor meeting going on right now, and they're announcing new things that are coming out, new plants, new facilities, etc. Right? And so AMD started dropping, which is kind of funny when you think about it, that the stock is dropping as they're getting pretty great news, like all in all. Like you couldn't ask for anything better to happen here. And the stock is actually coming down. But I made this really clear, and I like to use my big arrows on social media because sometimes we ignore the very important data that's right in front of us. But again, you're coming down into your 200 SMA here. This is your massive support. This is what we've been waiting for. This, if you're a buyer at least, this is what you really wanted. SMH is still very bullish. So I don't think AMD is just going to flip the script and just start selling drastically. But I'm going to tell you right now, AMD near this 200, if you can hold around 162 to 163, I think you're getting a good opportunity. Now, NVIDIA is running into all-time highs. You're almost at 136 now. All-time highs at 140. That was a great opportunity down here. AMD is presenting itself with a decent opportunity as well. Last opportunity we mentioned here was ARM. So again, you got to take these opportunities when they show up, and you're really just being patient. I think you'll have an opportunity tomorrow if this does hold. You're not going to be too late for these types of positions. Be patient because the good setups will continue to reveal themselves to us. And again, that's a very big notion there. Tonight as well, you have your Tesla robotaxi event. I might be live here later. I don't know. But overall, Tesla, if this thing goes really well, Tesla should push into all-time highs over the next few months. If it doesn't go well, I think Tesla drops very quickly below $200 over the next few weeks, maybe 2 to 3, being aggressive on the downside there. I think this event has a lot of notion here, and I think this could go very interesting, and I think it's a very coin flip of an event. Hopefully Elon has something good to say here because he's been mentioning the robotaxi at literally every earnings call for the past like 8 to 9 earnings seasons, and that's been over 2 years. So again, a lot on line here for Tesla. I would be watching them as well. That's my opinion on the market. If you have questions, comment down below. I'll see you tomorrow.